So first, let's start with trade war, and this is the first graph. We made this very similar graph even back in Feb when we had first highlighted that there is a growing risk of a global trade war, and more or less that risk was materialized or realized on 2nd of April. Even before that, 5 6 days before that, when U.S. president had imposed tariffs on Canada and Mexico, we had commented that this is the first shot has been fired, and now this is sort of new repercussions are coming in. So this is the chart which shows the average rate on dutiable goods or the average rate on all imports that the US has imposed as tariff over a very long period of time. The chart goes back to 1825. And as you can see, the black line is the focus line that we want to focus on because that is the average on all imports. And before 2nd of April, before that date, it was expected that the US president is going to announce tariffs which will be close to 17 to 19%, where this black line is right now. You can see that. But eventually the announcement came and the tariffs are close to about 29% weighted average. Now, the calculation may vary. A lot of people have calculated it as about 20 to 23%. Some have actually calculated upwards of 40%, but it depends on what weights that you use. If you use trade weights, then logically, this number will come up about 29%. So whichever way you calculate these tariffs, they are way too high than what markets were expecting them to be. And they are also way too high than the last such big event, which happened 100 years ago, which is the Smoot-Hawley Tariff Act of 1930. At that time, the rates were closer to about 20%.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.